Fellas, you know Degree Cool Rush deodorant, right? Well, last year they changed the formula, and guys were mad about it. One dude even started a petition. So guess what? Degree heard us, admitted they messed up, and brought the original Cool Rush scent back exactly how it was. And it's in Walmart, Target, and other stores now for under $4. So grab some and remember why its cool, crisp, and fresh scent made it the #1 men's antiperspirant for the last decade. Degree Cool Rush is back, and it smells like victory for all of us.
Reality radio for a really great future. We're talking real money.
Question 27B, subtext 2. I'm so tired. We've been here all night reading this question. Please call
You're
us.
You're gonna make it sound like we don't want questions. We want questions.
We do. I'm making fun. I am making
word.
fun. You know, if it wasn't for making fun, the show wouldn't be any fun. But if you'd like to call us and save us from this question, the number is 855-935-TALK, 855-935-8255. And before we get to the topic du jour, or de heure, how do you say hour in French?
I don't.
Do you know that? Or
Yeah,
did you
I took French in 7th and 8th
Did
grade.
you? Okay. The question de heure.
Pretty sure. Look it up and make sure, but I'm pretty sure. Yeah.
De heure.
Somebody's going to call and correct me now.
We're going to just take a question because Pat has been hanging on for a while because that other question still hasn't ended. It's the question that doesn't end. 855-935-TALK. And by the way,
H-E-U-R-E, I had it right.
If you're listening to the podcast and you're going, wait, did I miss an inside joke? Go back and listen to yesterday's podcast, then you'll get it. Pat,
joke that keeps on giving.
You're up next. Welcome to Talking Real Money. Pat?
There's Pat.
Hello?
Hi,
Hey,
Pat. Yeah.
Good. I thought I went to all that trouble for nothing. Hey, Pat, welcome to the show.
I'm right here.
What can we do for you?
I got a shorter question for you.
Thank you.
On there.
Okay. Can we get this done in less than a half an hour?
40 minutes tops?
Yep.
Okay.
I'm 65. I been investing in real estate since I was about 18 years old, and I've sold everything off this last year. And I have about, I'd say, $6 million in the bank in cash and about $7 million paying me in contracts, real estate contracts.
Oh, okay. So
yeah. 7 years.
They're paying you for the purchases.
Yeah.
They've ranged from 1 year to 7 years on the contracts.
Okay.
So what do I do with this cash?
Do you want to remain an FOBOA, friend of Bank of America?
What does that mean?
I don't think so.
That means that means they're taking the $6 million you have invested in their bank.
Oh, I get it.
And they are investing it and making money.
Mm-hmm.
And they consider you a great friend. I mean, you're a real pal.
Yeah, I'm not making any money. That's the
there. Okay, that sounded.
Okay, here's an idea then. Put it into something that goes up.
Yeah.
Only.
That's a good one.
Don's really on today, I'll tell you what.
Yeah.
Here's a stepping back just for a moment. I mean, you're in a great position. I don't know. Do you spend $1 million a year? How much do you spend a year to live?
I don't have any debt. There's no debt.
What's your cost of living a year? Just rough ballpark number.
$100,000.
Okay, so
okay, part 2 should be spend more, but
well, good. I mean, I have no problem. I mean, well, I do have a problem, just wasteful, but I don't really care about having toys or anything.
Yeah.
I got a farm that all the equipment's paid for, so I can't.
You got anybody
see any
else
around? You know,
you got anybody else who's reliant on you or could use your money? I mean, family, children, ex-wives.
I did. I took care of that. I've been. I had one child consolidate all their loans, and I paid them all off, and he's paying me back at 4% instead of his, 10%.
You're banking on yourself.
Please.
Yeah, I'm sorry. Hey, so you don't need this much money, basically is what you're saying.
No, I don't. But I would like to have that cash that I'm accumulating, giving me some type of a return on it. Mm-hmm. And I haven't had a problem with that over the years because of investing in the real estate. I had a return, and now I don't want anybody calling me about their water heater. I don't want anybody calling me about their roof leaking. I don't want anything to do with any of that stuff anymore. So that's why I sold everything. And
charity?
No point in me going on any longer,
Charity?
Spending half my week about problems.
Is some of this money going to end up going to charity or family, or to whom is it going to go? Because there's no way you're going to spend it all.
Yep. Oh no, family and charity.
Then let's take a break. We'll come back with a couple of ideas for you.
Oh, that's a cop out. He's going to take the break to think of something. He needs like 5 minutes to think of something. So
exactly. Maybe longer.
He'll have something. If you're listening to the podcast, it's like 15 seconds. But if you're listening to the show, it's like 5 minutes. So you're giving Tom plenty of time. 855-935-TALK is our phone number. 855-935-8255.
Tom and Don are talking real money.
A second opinion could save your life either physically or fiscally. Let one of our Vestory advisors help you save your future at Vestory.com, Vestory.com.
For your real life and real future, Tom and Don are talking real money.
Remember that old statue? I think it was Rodin or somebody, the thinker, the guy sitting there. That's mm-hmm. Tom sitting back in the corner right now.
Oh, yeah, right.
Still thinking about the answer. So, Pat, I'm going to ask you another question about your very successful money generation thing. And I don't blame you for not wanting to manage real estate. It can be a pain in the neck. I've done it. Don't want to do it. It's a job. But with the money you have and the money coming in, the thing is you got to figure out someplace to put it. You need to make more money with the money, but you've got to also, here's the problem with having money. When you have money, you kind of need to start planning for it. Now, do you want to create this plan as to where it's going to go, to whom it's going to go, and then how much risk you're going to take and how much you need and all this stuff? Do you want to do this on your own, or do you want to find somebody to help you?
Well, I don't want to do it on my own, but I've got a will and a minor plan, so we put together a will a few years ago, and I'd like to get an investment plan put together. Right.
And what I'm talking about is somebody who can kind of give you that overview of all of it. The kind of looks at the estate portion of it, looks at what the charitable, have some of the best ways to give to charity, and also builds that investment thing. And that's why we think you should avoid stockbrokers and insurance agents at all costs, and only deal with, if you're going to get somebody, you get a fiduciary registered investment advisor who has some planning experience and does planning. That's really critical.
Yeah, I agree.
Okay, so we have a list of some of those at our website. For example, talkingrealmoney.com/help, HELP, just like the Beatles album. That'd be a place to get a few names. And again, we think that it should, and Don said this, we don't think it. It should be. It should be a 100% fiduciary, not someone who is duly registered, because everybody in this business now says they're fiduciary when they are for a time. And then when it comes to using the products for you, they will move you into something that comes from a broker dealer. So 100% fee only fiduciary advisor
who charges
talkingrealmoney.com.
Like 1% or less.
And if you give them $5 or $6 million, it'd be way
should
less.
Be quite a bit less. Yes.
Yeah. So that would be the place to start. And by the way, you could talk to a few people so you're comfortable with. We think you should use only a more passive strategy that involves rebalancing. low-cost exchange-traded funds or mutual funds, no stock picking, no timing at all.
And then you probably need some charitable remainder trust. You'll probably need to have some estate planning that better protects assets and the beneficiaries and that kind of stuff. So go to talkingrealmoney.com/help. I think there's some good ideas there because it's so hard to say invest it this way given the complexity of the situation that is going to unfold. So thank you so much for the call. We really appreciate it. 855-935-TALK is our phone number, 855-935-8255. And Frank, it's your time. Welcome to the show.
Good afternoon, gentlemen. Please help me believe in fiduciaries again, because the more I learn about them, it's just become a buzzword.
Yes, and we know.
The more I research, you have to take them to court if they don't act in your best interest, and that costs you a lot of money. And even though they might have made a mistake, as long as they were acting. So what do you mean by 100% pure fiduciary? And I'm kind of thinking, how would you pick one? I don't know anything about this. All I know is the more I read, fiduciary doesn't really mean anything.
It doesn't. That's why we have to. That's why we have to qualify it.
You have to trust them.
Yeah.
And all of that stuff. There's no performance bond, something like that. But
no.
I'll listen off air. But make me a believer again. Right now it doesn't mean much to me because everybody throws that around. Go to any of the big banks and their fiduciaries.
Dude, what
is 100% fiduciary too?
It's a term that we've used because we're trying to qualify this because, as Tom just said a minute ago, everybody out there now calls themselves a fiduciary. What they do is they establish a registered investment advisory with the Securities and Exchange Commission, and they also have a broker-dealer with FINRA or an insurance license. There could also be an insurance license on top of that. We started using the term 100% fiduciary after an article was published in Market Watch a decade or so ago.
Yeah, a long time. Yeah, it's been out there.
But we have a link to the article. The article stated that out of the 1 million financial advice providers in America at the time, the author determined, looking at all their registrations, that only 1% of those were always required to act in your best interest. Now, does that mean they will? No. But always being required to is better than sometimes being required to. And that's what we run into a lot. We just ran into it on one of the podcasts this week where somebody wrote us a note saying, well, I have an indexed annuity and it was sold to me by my fiduciary advisor. And the fact of the matter is, you can't be a fiduciary advisor and at the same time sell someone an indexed annuity. That violates their fiduciary responsibility. But that doesn't mean people won't continue to misbehave. It's like saying it is illegal to rob a bank.
Well, there are bad doctors or bad lawyers or there's bad professionals. Set that aside for a moment. Put the odds in your favor. Number one, if you go to a major brokerage, you know the names. I'm not going to put them out there. But if you go to a major brokerage, you're putting yourself at risk. They are both registered as an RIA and they're registered as a broker-dealer. So here's a place where you could get sold something you may or may not need. I would eliminate them. Number two, I would eliminate anyone who is duly registered, period. First, that's my personal. There's no reason to work with somebody that, again, may or may not have to put your best interests ahead of their own. And then you need to determine, Frank, what the strategy, because at the end of the day, you have to agree with how they're going to manage your money. You have to decide, is this going to be active management, or low cost indexing, et cetera? That's a decision every investor needs to make. But you're right. Fiduciary is overused. It's improperly used. It doesn't guarantee anything, especially for those who are using a duly registered advisor.
And I'm not allowed to use the L word anymore, but when these people tell you that they're a fiduciary, in many cases, they're L-ing. They're prevaricating. But here's the key number is, this is what Tom's talking about. Put the odds in your favor. Remember, out of the 1 million people who provide financial advice, only 10,000 are always required to act in your best interests, and out of those, only a handful are always absolutely 100% going to do it at the lowest possible fees.
And we have the list again, talkingrealmoney.com.
Well, it's not the list; it's a list.
That's a list, but no. But what I'm saying is, all of those people are 100%
yes, they are.
advisors. Period. We wouldn't put them on that list. Period.
And I have one other tool there. When you go to talkingrealmoney.com/help, get the advisor interview form. If an advisor will not sign that, showing you exactly what they charge, how they invest your money, it's all on that form, and sign it stating they're a fiduciary, then don't work with them.
Tom and Don are talking real money.
Tom and I created Vestory to help everyone become a better investor, even those who will never be clients. Let one of our advisors help you start your financial plan or solve a money problem free with no obligation or high-pressure sales pitch at Vestory.com, Vestory.com.
Your guides to a really great financial future. Tom and Don are talking real money.
Oh, yeah, we have lines open for you. 855-935-TALK, 855-935-8255. And because we have so many open, continuing from the previous hour or the previous Talking Real Money podcast, we go back to our 750-word question.
Book of who wrote this?
What's her name? I don't remember.
Yeah,
I didn't put it here.
We need to give her full credit.
She's in California. That's all I know.
Run-on sentence.
She's
the Book
in
of California. Okay.
Right.
Yeah.
Now we're on to question 5.
Yeah. Okay. Mm-hmm.
You suggest diversification through baskets, buckets, funds, ETFs. I get it. I've been DIYing my IRA retirement since 2009.
Ooh.
She's going to get you with this next segment, mostly with individual stocks. My returns have been higher than the S&P 500.
Ah, really?
But likely not enough to justify the time suck every week. I'm not an expert. Without a few of the past better selections, I'd have way less. Please offer another way to look at this.
Yes. Okay, I want to make sure I'm understanding the question. The question is,
get the question.
You could make more.
She believes
if
she
you own
would
the
have
right stocks.
Right. She believes she made more by owning the right stocks. And she may have gotten lucky and did. Luck.
Okay, let's go back. The only reason you ever own individual stocks is to make more than the market. There's no reason to do it otherwise. Number 2. As we alluded to earlier, the experts, they do make a little more than the market, but by the time they figure in the trading costs, et cetera, they end up less than an index fund. Will there be periods of time where you get lucky and you pick Tesla instead of Coca-Cola? Sure. But for the most part,
who wants a company from Atlanta?
Well, sorry about that. But here's the thing.
I'm kidding.
Why in the world are you doing that in your retirement? I don't think you should do it at all. Okay, no. If you got to take a flyer and you got to take 5% of your money and you're trading, blah, 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 okay, go ahead. But in your retirement accounts? Really? That doesn't make any sense to me, period.
All right. I'm going to wrap this up with this one right here. We're going to finish it.
I'm either going to take a nap or go get lunch.
My 401k choices all come with ridiculous fees. So offensive to me as a boglehead. She can't be a boglehead and buy individual stocks.
Buying individual stocks.
No, you can't.
Well, no, but Vanguard's using private equity, so I guess.
But Bogle's dead. And she says she has no Roth option. Makes me want to not participate by putting only up to the match, and it all goes into cash equivalent. It doesn't grow. And there's a 0.6% fee.
Whoa.
Well, hang on. The cash equivalent, she says, has a 60 basis point fee. You read that right. Not 0.06, 0.6.
But you went so very fast. This is the money that's going into a Roth 401k.
No, her 401k, she doesn't have a Roth option.
Okay, so the money going into her 401k is sitting in cash. Why?
I'm going to get to that. A few index funds are offered with a 1 to 1.3% fee.
By the way, that may include the administration fees, the third party. There's always these other costs in 401k plans that sometimes you can see and sometimes you cannot. So this may include those. I don't know. But you're right. That would be outrageous to have an index fund that is charging you more than 1% a year.
However, had you been in those index funds, even at those higher fees, you would have probably made quite a bit more money than you did in the cash equivalent. That's
Yeah,
the
for sure.
trade-off. That's the trade-off. You know, it is what it is. And as you said, you may leave this job and take a lower one. And so then you can roll that into a traditional IRA, lower paying one, I should have said, and then do a backdoor Roth if you can afford to pay the taxes on it, et cetera, et cetera. But you're doing a lot of things that are cutting off your nose to spite your face.
Does she want some movie recommendations or maybe a dinner out suggestion?
She didn't put that in here.
Oh, okay. I just
Oh, no,
assumed
she's
we're
married. She doesn't
going
want to
through.
go out with you.
Join the club.
Yeah, I don't want
But
to talk to you either.
thank you for your lengthy and very thoughtful question.
She says she's working. Oh, no, I'm not going to read you the rest of it. All right.
Please.
You don't want it? Okay. 855-935-TALK is our telephone number. We do have lines open for you. We'd love, love, love to talk with you about money.
Well, we have a call, but we'll take
We're
it at
not
the other
going to
side.
take it because we only have See, you hear the music? Music means we have 30 seconds. So we have to go. So call us, though. We still have a lot of time remaining in the show. And we do want to answer your questions. We really do. And we were joking around with that one because it was the longest question we've ever received in writing. But we tried to answer it. 855-935-TALK.
Tom and Don are talking real money.
Tom and I created Vestory to help everyone become a better investor, even those who will never be clients. Let one of our advisors help you start your financial plan or solve a money problem free with no obligation or high-pressure sales pitch at Vestory.com. Vestory.com.
Reality radio for a really great future. We're talking real money.
You bet your bottom dollar we're talking real money here on Talking Real Money, the Talking Real Money talk show. I'm Don. That's Tom. Give us a call at 855-935-TALK, 855-935-8255.
I have no idea what that accent was.
It's kind of a carnival barker sort of thing.
Okay.
Yeah, it's kind of a variation on that theme. Maybe a bit of a wise guy.
That sounds
Could be a
bit of
little
that in
wise
there.
guy.
I
Could
hear
be
that. I
a
hear
little
that.
carnival barker, a little wise guy. Kind of Jersey-ish. 855-935-TALK. Call us. I'm Don. That's Tom.
We're here.
Phyllis, you're up. Welcome to the show.
Oh, good. Thank you so much. Well, I'm looking for a second opinion on my taxes. I did make a mistake. See, I have an advisor in Vanguard, and I've been working with him for 3 years. But when I joined Vanguard, he was very against my putting some money into an immediate annuity. He said, no, no, no. So I insisted.
Okay.
And so finally he said yes. And, now I'm finding out that I was mistaken when I signed up for that because I thought that for the first 7 years I would just be getting my principal back. And then after that I would pay taxes. But now the IRS
Every
is
dime.
telling me that. What?
Yeah, no, you all of the interest portion of that is always going to be taxable from the get-go. Somebody, if they told you that, they totally misled you.
Well, you mean they have an algorithm that figures out
Which portion is taxable and which portion is return of principal? Yes, ma'am.
Right. So, I don't know, on $100,000, I was getting $13,000 a year approximately. The IRS now wants about more than $3,000 on that alone. So
Over how many years?
1 year.
And they want $3,000 in
Yeah.
tax?
That sounds high.
That doesn't make sense.
I know.
That
And
sounds
my I'm waiting to get the 1099-R from them.
Okay.
Yeah, here's how it works. Just so you're clear, I want you to be really, really clear. When you buy an immediate annuity, a portion of the income, a portion, and we don't know what that portion is, only the insurance company knows. A portion of that is returned as non-taxable premium, return of your premium, until the premium amount runs out. Then it's 100% taxable, but a portion is what they impute to be the interest. That is immediately taxable in the year it was received. And what it's called is the exclusion ratio. It's the amount of the premium, the payment that is excluded from taxes until that principal is fully returned. And that's going to vary from policy to policy. So how much how much income did you get in the last year?
Oh, I sold property, so it was a lot.
No. I'm talking about from the annuity.
Oh, about over 13,000.
Over 13,000, which would mean that probably about 3,000 would be taxable.
Mm-hmm.
But on
not 3,000, not 3,000 in taxes due. 3,000 is taxable income.
Right, which would mean
whatever rate your is.
The IRS is asking me for
3,000.
About
okay.
3,500.
This is what you must do. This is you just do not have a choice in this matter at this point. You can either send them the money, or you need to hire a CPA to go over your return with you and make sure that they make the correct determination, and then they can respond to the IRS. That will cost you something, but it's not going to cost you $3,000 more than likely. So I would hire an accountant to go through your return and see where the mistakes were made. But yeah, you do have to pay taxes on a portion of the interest on an immediate annuity.
Tom and Don are talking real money.
Is your portfolio a mess? You may have a case of hodgepodgeitis, but don't worry, we can help. Just set up a free, no-obligation meeting with a Vestory advisor at Vestory.com. No sales pitch, guaranteed. That's Vestory.com.
For your real life and real future, Tom and Don are talking real money.
Your questions are very important to us, even if they're 750 words long. 855-935-TALK. That is our phone number. We really like it when you call them in. There's just something about typed questions that makes them seem more ponderous. So we love it when you call us at 855-935-TALK, because you can call us on that number 24/7.
Don has a light in his room that goes on. He jumps out of bed, runs down to the studio, turns everything on, and answers your question. Boom.
That's my one superpower. Talk show. 855-935. I'm a talk show host. Joanne, welcome to Talking Real Money.
Hey, Joanne.
Hi, I'm a fan.
Thanks, Joanne.
Thank you.
I heard something that was similar to my situation. It was a gentleman who had started investments very young, and he had all sorts of real estate. And
that was Pat.
Under 100,000. I missed the answer because I got a call, and I'm in a similar situation, except I'm more mature. I'm 80, and I have about $1,200,000 approximately in investments with Schwab. And I have about $700,000 from a recent sale of a house, and it's liquid because I thought I was going to buy another house, and then I was advised not to buy a house at my age. So I'm wondering what I should do with that.
Well, there's a couple of things to think about.
Low.
Yeah, there's a couple of things. First of all, in terms of buying the real estate, as you may know, if you're a fan, you know, we believe in owning real estate. If it's not for investment purposes, it should be for lifestyle. And I think, frankly, at 80, no offense, mature is a great word, might not be a great time to be making an illiquid investment. That's number one. Number two, with the money that you've got from that and the money at Schwab, everybody should, especially at your relatively young age, you should say, what is the purpose of that money? I'm not going to spend it. I'm going to leave it here. Thank you. I'm not going to spend it all. Therefore, I'm going to do it. Leave it for my children, charity, whatever it is.
Well,
then you can make a plan as to how to invest it. And what we told Pat was, then the question is, are you going to do this on your own, or are you going to hire someone to do it for you?
And Joanne, what's your purpose for this money? You're not going to spend it all, right? Unless you're going to live a very highfalutin lifestyle. What's the goal? What are you going to do with it?
Number one, I'm solo. Oops, excuse me. First of all, I'm solo. I'm widow. I have no children.
Okay.
And
charity?
I might as well buy a really nice, probably.
Yeah.
Nieces, nephews. But I guess, so buying real estate is still high-end, probably.
Yeah, I wouldn't buy real
high-end now.
You don't want to manage a piece of real estate, do you?
No.
Yeah.
No.
Why do that? That's silly. I mean, if you want to invest in real estate, you can get a real estate mutual fund. But I would suggest that, as Tom said, the first thing you need to figure out, we're always putting the investing cart ahead of the planning horse. And you got to figure out where this money's going to go, what purpose, what portion is going to go where to do what. Then you can figure out how to best invest it for those purposes. And that's something you can do on your own. Yeah, that's something you can either do on your own, or you can hire a good professional to do it. But as we keep saying, don't hire someone who's a stockbroker, works for a major investment firm. Don't hire somebody who's an insurance agent. You need to hire somebody who's a fiduciary, who does planning work, and the way you can tell is if you go to them and they tell you, oh, here's how we're going to invest it. If they say that, then they're not a planner, they're a salesperson.
Okay.
We have a list of some of those providers at Talking
Schwab.
Sorry?
Pardon me?
Do not invest it all in
No. Schwab is great.
Schwab's fine.
We use Schwab for our clients because Schwab is a great place to keep money. It is. They have very, very, very reasonable fees. They're safe. They're well managed. They're a good company. But we think that when you are dealing with a situation like this where you've got some complex planning to do, you need someone to act as your financial quarterback, as your financial coach, to go out there and find, if there's going to be a charity getting it, you got to identify the charity, find the best way to fund that charity, whether it's a charitable remainder trust or whatever it might be. You got to find a way to give the money properly to the kids and how to invest it for those purposes. And that's where somebody can come in handy unless you're really good and want to do all this.
And we mentioned again that we have a list of those folks, the ones that we have vetted and we trust, talkingrealmoney.com/help. You can go there and you can see some of those folks that we think you could talk to.
All right.
Great.
Thank you, Joanne.
Thank you very much.
Take care, ma'am.
Bye.
Bye-bye. 855-935-8255. Now, remember, that number works 24/7. When we're not here, which will happen in less than 10 minutes.
What?
Less than 6 minutes.
Oh, you're right. Oh,
yeah.
Okay.
We don't get to hang around as long as some other people do.
Ouch.
We're going to be out of here. You could still call that number and leave your question. You can speak it, record it, and then we'll answer it on a future podcast, which you probably should start listening to if you like the show.
And you should sign up for our YouTube channel.
All right, if you really want.
No, come on.
All right.
It's become very popular.
7 people watch our podcast or something.
No, it's more than that.
550.
For those of you who would like to see us examine things in the background of Don's studio, just for fun, the box that's been there since the late 90s, you can take advantage of that. By the way, I want to finish the thought on real estate because this comes up so often.
I so thought you.
And people say, "Why do you hate real estate? Why do you?" Tell
we
people
don't hate
not to
real
invest?"
estate.
That's what the message people receive. You don't like real estate. Well, you're not in real estate. You're in stocks and bonds, so you don't tell people to buy real estate. No, that's not true. That is not true. If you want to own real estate and operate it as a business, God bless you. I've seen it work for people.
Yep.
They bought properties,
Yep.
they managed them, they took money out of them, they sold them, they got money.
But that ain't passive. That's not passive.
No.
That's
a business.
job.
Yeah, that's a business. I think that's great. If you think you're going to buy something and get rich very quickly and flip it, think again, because first of all, there's a lot of people that are doing that. Second, prices have gone up quite a bit. I don't know that they will continue. I have no idea, but they've gone up quite a bit. And number 3, you got to know when to buy and you got to know when to sell. Always hard
You
work.
gotta
Any
know
investment.
when to hold 'em.
Exactly. So we don't dislike, and Don mentioned, we use real estate investment trusts in our portfolios.
Yeah, if you want to invest in real estate, that's the way to do it because you don't have to work at it.
Yeah.
If you're looking for a
passive
job,
income.
go buy some houses. Great. Be a landlord. Fun. Yay. It sounds like, I got to tell you, as one who's rented a house or two, it's really miserable. I would never want to be in that business.
Don't
Never.
get me going because we've still got one
Oh,
property
Lord.
that no way.
But it's, I mean, it can be a good investment, but it's
Sure.
passively with a fund. But it's not if you're just going to go buy a house. No, it's not a great idea. But anyway, I was saying listen to the podcast because it's becoming so popular.
Ah, okay.
I mean, I got to tell you, I'm looking at the latest business, the top of the charts in the business category at
This is
Apple
from Apple?
Podcasts.
Okay.
And this is all of the United States. The number 100 podcast is Jill Schlesinger, Jill on Money.
Pretty well known. Yeah, sure.
The number 102 podcast in the
With a
country,
bullet? Yeah.
Talking Real Money. Woo! And way down here at 163, Rick Edelman.
Where's Paul Merriman in that list?
He's not on there.
Oh, it's going to hurt his feelings.
Are talking real money.
Set your course for a great future with a free copy of our 60-page Better Retirement Guidebook at vestory.com, vestory.com.
Your guides to a really great financial future. Tom and Don are talking real money.
And for all of you who are trying to figure out how to properly invest that money that you have sitting in the bank, and you want to manage it yourself, you want to do it yourself, but you need somebody to sit down with you and kind of go through all the particulars it's really hard to do in the course of a talk show. We want to give you the help you need for free. We will not manage your money for free. We will charge you for that. But if you need some help, a meeting with somebody, just go to vestory.com and set up an appointment or call 800-386-3004. That's vestory.com.
We hope you realize that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately, consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestory, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. That should keep the lawyers happy.